Hi, everybody. This is Michelle, and I'm here with Mark Sorenson, the founder and CEO of Royal Fund Management and 401k Maneuver. How are you today, Mark?
Oh, I'm fantastic, Michelle. How are you?
I'm great. Thank you.
Good.
So we get questions about professional management, and because so much has changed over the years as it relates to 401ks, I thought it'd be a great topic to sit down and ask you, pick your brain, so to speak, about the evolution of a 401k account advice.
Oh, thank you for that, Michelle, because that's a great question because a lot of people don't even realize that professional advice is available for their 401k account in the first place.
Right.
But then once they know that, to learn that there's been a pretty tremendous evolution, as you put it, in 401k advice over time. It kind of started with just buy and hold. In fact, Michelle, I have a chart. If you don't mind, I'm going to share my screen
Yeah,
real
pull it
quick.
up, please. That'd be great.
I think it might help people to be able to follow along. And this is the evolution of 401k account advice. And if I'm going to start down here at the
Mark, would you
bottom,
make
so
it a little bit big,
I'll,
just a little bit bigger for everybody to see? There, that's perfect.
Michelle, is that better?
Yes.
Okay. Well, let's start down at the bottom with buy and hold. Traditionally, that's what people have done with their 401k even today. Whatever allocations, whatever was put at their investments, their 401k was put in long time ago. Many people are still in the same thing today. And a buy and hold strategy might work over the long time, a long period of term, a long term, because the market goes up 80% of the time. You just ignore it when it's down and know that you're going to be working a lot more years. You're constantly deferring more money. So your dollar cost averaging into your 401k. And so you just ignore it. In fact, one of the most well-known investors still today is Warren Buffett. And when he buys a stock, he's been known to say that I'll buy a company that I think I'm going to own for 50 years. However, that doesn't mean to say that the market isn't on pins and needles, that investors aren't on pins and needles to find out what changes Warren Buffett is making to his portfolio from time to time in terms of what he's buying or selling. So even though buy and hold is fine, you just ignore it and know that the market's going to go up over time. Though that might be true, an investment that you buy today might not be the best investment for you a month down the road or a year down the road.
Right.
And so buy and hold, you might not have to look at your statements. It might be easy, but quite frankly, I think there's better alternatives today.
Okay, what's the next step in the evolution, or I guess level?
Well, as you can see on the chart here, it's automatic rebalancing. Over time, the 401k industry created what's called auto rebalancing. And not all 401ks have this. You'll have to check with your plan sponsor, check with your HR director. But this is when, let's say you allocated initially 50% to bonds and 50% to stocks. Once a year, they would automatically go in there and rebalance, maybe more often, depending on your plan, would automatically go back in and bring you back to that balance. So for example, if stocks have done better than bonds, you now own 60% in stocks and 40% in bonds. It would automatically sell some stocks, buy some bonds to bring you back to the allocation that you wanted originally based on your risk tolerance.
Right.
So that was kind of the first step in the evolution of 401k advice. The problem, though, with that, in my opinion, Michelle, is that let's say you are in the same 50-50 bonds versus stocks for a very long time. Even though you're reallocating all the time, I like to think of it this way. You're always selling what is working and buying more of what's not.
Right.
Just rebalance back to pure percentages. So I think as the evolution of 401k advice continued, there became a better way to rebalance, quite frankly.
Got it. And so that leads us to the next level, which is target date funds.
Right. The industry, knowing that the average 401k participant, the average employee who has a 401k, there's about 90 million, are good at their job, but they're pretty disengaged with their 401k.
Right.
It's a complicated area, not only to understand how 401ks work, but then you got to understand how to invest too and make changes. So rather than, in my opinion, rather than really trying to engage the public, the industry created what they thought was a great idea. And it's not bad. And that is what's called a target date fund or a lifestyle fund or a glide path fund, as they're often called. And what they do, Michelle, is basically invest your money based on your current age and expected retirement date. But it is kind of a one size fits all approach because, in my opinion, not everybody that's the same age that has the expected same retirement date or year is the same person at all. They have different goals and objectives, of course.
Right.
But the benefit of it over buy and hold is that over time they create a glide path, and that what that means is they'll be more aggressive when you're younger and have a longer period of time to invest, and then
Right.
as you approach retirement they'll get more conservative, and that might make sense to some degree, but remember, I just don't think a one size fits all approach is good for everyone. So who's a good target date fund good for? It's better than buy and hold or just annual rebalancing as this evolution continued. But still, it's probably for someone who's not very engaged, doesn't want to get involved in their 401k. They just want to let the fund make changes to their allocations over time, just simply based on their age and their expected retirement date. But remember, they're lumping you in with your peer group.
Right.
You are no different from the fund manager's perspective than anybody else the same age with the same expected retirement date. So the evolution continued.
All right, which leads us to managed accounts.
Right, let me slide this down a little bit. By managed accounts in this graph, what I'm referring to, Michelle, is there are some companies now, some 401ks that have offered a 401k investment management individual to the individual employee within their 401k plan. And there are a lot of these available today. However, many, I would probably still argue most of them still manage money the way a target date fund does, meaning that they manage your money based on your current age and expected retirement date. I'll go back to my story about my daughter that I've told before, Michelle, that she was defaulted to a 2060 target date fund, right, when she first started her nurse practitioner job. And all that means is they're going to be more aggressive because she's young now, but later on in life get more conservative as she approaches that retirement date that they assigned to her of 2060. But ultimately we decided to make changes for her and said taking advantage of her full investment menu might be better over time. So even though there are managed accounts today, there are a lot of alternatives for professionally having your account, your 401k account at work individually managed. Most of them today still treat it like a target date fund. They don't pay attention to your personal risk tolerance. They don't manage it for risk every now and then based on current market and economic conditions. They purely put you on a longer term glide path to a certain retirement date along with everybody else your age.
Right, right, which leads us to personalized professional account management.
Right. Well, that's what we do at 401k Maneuver, and there may be others that do it too. So you don't have to use us. But let me explain what we do at 401k Maneuver, which I think is better. As the evolution of 401k advice continued, we thought, making sure that people know that there is individual account management. You're good at your job. You might not want to have to become the investment expert in your 401k at the same time. So there is professional advice available. But when we looked at what was available to the marketplace, we said, as I talked about a minute ago, wait a second. What about two people that are 50? One of them didn't save much up until now. The other one has maxed their 401k contribution since the day they started working. So one of them has a large 401k balance. They want to be conservative to just protect what they've grown into the retirement. The other person wants to be more aggressive because they've got to catch up. That's an example of two people that might be in the same target date fund or same managed account that manages money in that way. So we decided that 401k management should be personalized, meaning we should understand what your personal risk tolerance is. We should also manage money based on the changing current and market economic conditions, rather than buy and hold or annual rebalancing or target date funds or a managed account that manages money based on age and retirement date. Why not get out of the way of the train when it's on the railroad tracks?
Right.
Why not try to be in what's working every now and then? In our case, we do it every quarter, every 90 days. We individually look at the client's account to determine whether we ought to be in a certain sector of the market that's doing better, or from a risk management standpoint, do we need to get out of the way of the train, so to speak? I know in one of our other interviews one time, you talked about a surfing analogy, and you
Right.
said riding the wave. And I think that's a common cliche anyway. So with our personalized professional account management, if the market's doing really good, regardless of somebody's age, instead of predetermined investing based on your age,
Right.
regardless of age, if the market's doing well, why not ride that wave? And regardless of age and expected retirement date, if the current and economic conditions turn sour, as professional managers, we will do our best to manage risk and limit the downside so that we don't have to start over. Back in 2007, 2008, I heard a lot of people talking about their 401k becoming a 201k. Well, there's a lot of other of the older style 401k account advice strategies that don't manage money for risk at all. It's more of a longer term target towards retirement. So
Right.
we think personalized professional account management in a nutshell is take a look at your account every 90 days. First, let's look at it from a risk standpoint. What are the current market and economic conditions? Do we need to get out of the way of the train, so to speak? Second, for whatever exposure we do have to the market, why not try to be in what's working out of what's not? Remember what I said when we first talked about buy and hold. Something you buy today might be good today, but that doesn't mean it's going to be good, the best thing for you, or be good a month from now or a year from now. So
Right.
by looking at the account every 90 days, we can ride those waves when we see them coming off the shore.
Fantastic. This is really interesting how it has evolved, you know, and to what it is now. Thank you for sharing that. I really appreciate it. And I'm sure the viewers do too. So if
Good.
you would like more information, you can go to 401kmaneuver.com. We have guides. You can go ahead and learn how it works. You can sign up. We have blog articles. We have a ton of resources, because really 401k maneuver, Mark, I mean, I'll speak for you. It's not we, it's you. You and your team believe that, it's critical that investors be engaged, whether they're doing, whether in target date funds or they're doing professional individualized account management, because you need to know what's going on. It's your money, it's your retirement, it's your future.
Well, you're right, Michelle. Yes, we are passionate about our goals, and our goals are to help improve retirement for people that are relying on their own savings, their 401k, making sure they're engaged, educate through our blog and videos like this. And if we can help, get in touch, and we would love to talk to you.
Fantastic. And Mark, you all have a 15-minute strategy session that people can sign up for and talk to one of the advisors.
Yes, I believe on the website. I'm not the technology genius on the team, but I believe on our website you'll find a link to a 15-minute strategy session. And when you find that link, I would encourage you to take advantage of that. One of our advisors won't try to sell you. They'll answer your questions. There's a lot of great questions that people have,
Yeah.
and we'll determine whether we think we can add value, and then it's up to you.
Fantastic. And also this link will be local. That link to book your 15-minute strategy session will be below this video, so that you can also find it on the site as well. Well, thank you so much, Mark. Is there anything else you'd like to add before we wrap up this video today?
No, thank you for your time, Michelle. Very important subject. There's so many people that are having to save for their own retirement through their 401k. As Social Security's kind of wobbly today,
Right.
pension plans are going away. Employees are more responsible for their own retirement, and that's where we think we might be able to provide some help.
Awesome. All right. Well, thank you very much.
Thanks. Bye now.
Bye.